The problem is, Dad will just blow it all on some flash sports car and wrap it round a tree. That was something somebody said to me a few years ago, and it stuck with me, partly because it was amusing, and albeit quite flippant, but it reminded me in talking about downsizing that from the financial point of view, there are sometimes quite a lot of other things being thought of and considered that don't necessarily come to the surface, and it's quite a difficult issue to deal with. We, as a result of that, are going to talk today about the financial elements of downsizing, and I'm joined by Mike Roberts of Pennymatters. Mike,
Hi.
welcome.
Thank you. Yeah, thanks for having me.
Last week, Candice and I talked about the more emotional, psychological, and the practical elements of downsizing. And it was interesting that we saw the sort of not so much pros and cons, but these are really good reasons, positive reasons why the right people should do it, but then the reasons why that was going to get in the way and be difficult, and you end up with this inertia of the right people not doing it. And that's the whole purpose of these two podcasts. And in my initial preparations and discussions with you, Mike, we found we were coming up against the same sort of thing, that on paper, there are some really simple, sound financial reasons for doing it. Definitely. And then there's issues that cloud it and judge it. And it's fine if somebody makes that decision and say, this isn't right for me. That's perfect if they've got information. The thing I find frustrating is when you see people for whom it's right and they, through that inertia, they don't move. Because we're talking mainly about people later in life. There are people considering this younger, but in the main, it's later in life. And to make a big financial decision later in life is something you're not really expecting to do, and can make it all the more intimidating as well. So that's sort of setting a bit of the scene. I think any major financial decision like that is always difficult for somebody to take. So we're going to look at the simple idea of, is downsizing right for you? And we've done the other elements of it, and we're looking at it from a financial point of view so that if it's right for you, how do you then do it financially and make it work as well? So Mike, welcome to the Sunday Property Breakfast.
Thank you.
Before we talk about your expertise in downsizing, tell me about the rest of your sort of financial background and expertise. And
Yeah, basically, I've been in financial services my whole working life. Started at NatWest Bank, but decided that actually giving financial advice was the place for me. I saw the mortgage team having a good life, a good time, so I thought I'd join in with that. That was 1993, so 30 years ago, which whenever I say that, it scares me a little bit.
Yeah, tell me about it, yeah.
But interestingly, actually, one of my very first clients were two sisters looking to move together and downsize. So it sort of had that theme throughout my sort of 30 years of helping people.
Yes.
But currently I'm with Pennymatters. So Pennymatters are a large firm of financial advisors. I'm one of the equity partners there, and we're giving people advice on an independent basis,
Yes.
Backed up with lots of experience. And I think that's the key thing here is, if you're talking to an advisor about downsizing, you want to be dealing with someone that's sort of helped a lot of clients do that. And
totally agree with that. And you wouldn't be sat here with me if I didn't have that respect for the way you work. I should point out, and I know it's something that Mike will have to point out, but this is general discussions. Once we start talking anything financial, we have to make that point.
Yes.
That this is very generic advice, albeit very important, but it is not anything in which anybody can make any of their own particular decisions on. And again, one of the purposes of this is for people to get in touch with me and with Mike to say, come and have a chat.
Yeah,
and see me.
absolutely.
So what's your experience then of chatting to people who are considering downsizing? Because I presume, unlike me, where I might meet people from a property point of view for whom it makes sense because of the properties they're looking at, I imagine, correct me if I'm wrong, that you just get people who say, we are thinking of downsizing,
Yes.
as opposed to you generating that idea.
Yes, sometimes, there's lots of different scenarios. Sometimes it is being forced on them because of their, care needs.
Yes.
That sort of thing. So, yes, you're right. They sort of have maybe moved along the process a little bit in terms of, we need to look at this financially now because, we've looked at all the other options and gone through the emotional bits of it and that you discussed in the last podcast, but what do the financials look like? I tend to see that these clients can be quite vulnerable, you know, that sort of age where, you know, they're quite vulnerable. Maybe, you know, their mind isn't quite working the way it used to. Obviously, they've not moved for many years and the process has changed. You know, they've been in the house a very long time. So their understanding of the financials is probably completely different to what is actually available to them now. Obviously, you know, I would say I've been doing it 30 years and there's never been more options than there are now in terms of the financial availability or the financial flexibility that's available to them. You know, we still don't want them rushing it. You know, it's a big process. There's lots to consider. And, you know, as you've already discussed, you know, the financial aspect of that is a big part of it, but it's not the only part of it. But like I say, you know, tend to see that this sort of generation are quite private about their finances. So may not have discussed it in full detail, you know, with their family and their kids. They can be quite private, but we do actually encourage some sort of family involvement.
Yeah, we touched on that last time, and I think it's interesting actually. As soon as we put these podcasts together, you have to have in your mind somebody who is the subject of this downsize. And so I had in my mind a couple who are choosing to downsize. Candice last week was talking about people for whom it may be more thrust upon them because of the whole cost of living crisis, and at a younger age, you know, maybe in their 40s and 50s as opposed to later age. You've, interestingly, one of the first examples you've given is somebody who doesn't have quite so much choice because suddenly they are, to use a bit of an old expression, asset rich, cash poor, and the asset needs to be sold and the downsizing needs to happen in order to free up money for care and for, you know, this isn't my version of, you know, the dare I say it, the sports car, the cruise, the life choices. This is practical. This is, and we all know the costs of care are pretty scary.
They certainly are. A client quoted £2,000 a week.
That's not uncommon. I regularly see 1,500 as a minimum.
Don't get me wrong. We have got clients that want to free up some money. You know, maybe their pension isn't quite what they expected, or they haven't yet had their own inheritance. Because obviously, don't forget, you know, you could be dealing with 70-year-olds that have still got parents around because of people living longer. So yes, we have still got the downsizers, the ones that want to enjoy their money. But I would say, if I'm thinking through the clients I've helped, a lot of them are, you know, needing to because of care costs or wanting to be nearer people that can help them, basically.
And again, coming back to my whole point of this, the obstacles of stopping people doing it, maybe one of the reasons why the majority of the people you see need to do it, we're probably missing people for whom it would have been a good idea before they needed and had to do it. They could do it when it was a bit more of a choice, with a bit more time element involved, and not so we better get this done pretty soon.
I think if you're being forced to do it or rushing it, you might be making some compromises that maybe you didn't really want to engage with. Time will give you a better decision, both on the way you finance it, but also the property choice and the timing of that as well. Exactly that.
And I think this comes back to this whole point of, you know, the thing I love about doing these podcasts is to stimulate thoughts and ideas, and that we are always trying to generalise, and I'm thinking of one person, you're thinking of somebody else, Candice is thinking of somebody else. What sort of processes, I hate the word process, but you're bound to think of it like that. What sort of process do you go through when you are talking to somebody who says, this is what I think I need to do, Mike?
Yeah, for us, obviously we have to dive pretty deep in terms of their financial position. Like I say, we do like family to be involved so that they're fully aware of what's going on, because they might be trying to influence a decision, you know, not fully armed with all of the information that they need. So, you know, obviously we have an obligation to make sure we dig deep and make sure they're disclosing everything that they've got.
I may be wrong, but I'm pretty sure if you ask most people how much money have your parents got in the bank or your children got in the bank, they'd have no idea.
That. Exactly that. And like I say, it's a generation where they're quite private about their finances. But the other thing we're finding is the understanding of their finances. So they might have a pension, they might have some ISAs, they might have some other savings, but they don't realise the sort of flexibility they've now got to utilise that money. So pensions are now very flexible. You can take it out in smaller chunks, whereas in the old days you had to take it all out.
Yep.
ISAs, you can take money out and put it back. So some of this is an educational piece in terms of, look, do you understand that you've got some flexibility that you maybe didn't know you had? The other thing is, even though we're dealing with clients 60, 70, even 80 years old, they can borrow.
Yes.
They can still borrow money because they tend to be offering good assets. So it's not based on income, it's based on assets.
Yes.
So I would say my process is get the family involved, make sure, they've even just done the basics of writing down what they've got. You'd be amazed how many people don't do that.
Well, I'd imagine that people suddenly say, "Oh, golly, I've got that ISA that I..."
or premium bonds.
It's just sat there and...
Exactly that.
Yeah, which is all...
It happens a lot. And then just exploring that and explaining it and just talking them through it.
Yes.
And then, like I say, the other thing is they can borrow. We come across quite a few clients that feel they need a gap between the sale and the purchase. I don't know if you've experienced that on the property side, but I'm thinking of a client where he had a classic car and lots of memories, and he just didn't want to have that pressure of a same day move. So he wanted the gap between the sale and the purchase.
Yes.
Found the dream home, but it needed a bit of adapting.
I've certainly seen that in that being to Adrian, the younger group, who are again looking for a suitable property. And I know the market's now changed and it's a bit more balanced than it was, but certainly in the post-COVID era, the issue was the availability. Most people could sell their property pretty easily, and so we saw a lot of people do that, where they would move into rented in order that they were then in a great buying position.
Yes.
More so than I can't find the right property. It was I'm now going to be I'm going to be the best buyer out there. I'm dealing with a couple of people right now where one of the main decisions they've got to make is, do I sell the main house and go and live somewhere else temporarily?
Yep.
Family, rental, going along, all joking aside, go on a long cruise. Somebody who've actually considered that if they're going to go abroad for 3 months, maybe to Spain, they can still property search.
Yes.
And they can still find the right property.
Sounds like a good choice to me.
It sounds like a really good choice to me. And we're talking to somebody else as well who is also, and this is maybe something we'll talk about in a moment, that they are considering buying, because the choice is limited. We touched on this a little bit last week, and we may as well talk about this bit now. Somebody's worked out that financially it makes sense. They've worked out that psychologically and emotionally they can get their head around it. But they then say, well, but Adrian, find me that property. So when that property comes up and is available, and they think that actually it's always going to be a compromise, but that ticks the main boxes I have. It's where I want to be. It's big enough without being too large and what have you. I really like that. You put your property on the market by the time, no matter how good your agent is, could be me. By the time it's on the market, that property's sold and they're not in that position to buy. So I've got a few people at the moment talking about that very idea. Do I go and buy the house based on the fact that I've got this more expensive property? What would you say to somebody who comes to you with that idea?
Well, I have got a few real life examples of that, and it makes sense. But obviously, there's a cost to that if you haven't got the cash available, to make that choice.
So if I use, and I know everybody's circumstances are different, but let's use a simple average £800,000 typical family home in the area we work in. And I'm buying the house I found, large flat, £500,000. So and I'm not asking for specific figures here, but that is something that is feasible.
Yes.
Unless they've got exceptional circumstances. From a value point of view, that's broadly feasible.
Yeah, it is. So obviously, a same day sale and purchase, that's easy. They've got the 800, they're buying for 500. But if they want to create that gap for various reasons, then they're probably more often than not going to have to borrow that money.
Yes.
But as I said, I think clients of that age, don't get me wrong, they probably haven't borrowed or had a mortgage for quite a few years. So that's a big thing to get their head round. But there are those options available for short term. Let's achieve this. And obviously it's likely to be their last move.
Yes.
And so we just help them weigh that up. There are costs involved. Obviously bridging isn't cheap. But if you're borrowing it for a short period of time, then the numbers do often work because of what you're achieving. Like you say, getting the right property, having some flexibility, not having to sort of sell and burn all of your furniture.
Yeah.
You've just got time to sort of manage that process.
Yes.
And as we've already discussed, and you discussed last week, it's a big event.
It is a big event.
And sort of creating that gap can sort of help that process financially and emotionally. So bridging is one option.
I think wearing my property hat as opposed to my finance hat, if anybody's thinking about that as an option, from a pure financial point of view, I would say it's the opportunity cost of that bridging.
Yes.
Nobody wants to bridge and pay a lot of money for finance.
No.
We've seen what's happened to the market as a result of 2% becoming 6%. And nobody wants to go down the bridging route of expensive money unless you're able to buy the house that you really want to buy by being the best buyer and therefore being able to negotiate a price. So there's partly the financial, partly the ability to buy. Purely from the property point of view, I think the only way I would ever advise, and probably you would ever advise somebody similarly, is if you know that that property they own is one that will sell relatively easily. And that's not such a glib comment as it sounds. I think there are properties, and I have some that we're currently selling, that they will sell at a price and it is just a marginal adjustment on price and there'll be immediately buyers for it because it interests 4 out of 5 people looking at that value. And there are other properties that appeal to 1 in 10 people. And I've got one property particularly at the moment which is a difficult one to sell, but it's a fantastic house for the right person. It's not going to interest the majority of people. And with those houses, I would say it's a difficult one to bridge and one that I would be reluctant to advise somebody to do it because we can't just say that buyer will turn up tomorrow because they're not that price sensitive. If you've got an estate-based house, a 4-bedroom house on an estate nearby, and the pricing sensitivity means that if you are struggling with the bridging costs and don't like the idea of it, a little drop in price and you've got to buy it. So I think that's an important thing from the property point of view.
Yeah, I've got in my notes that part of the first meeting is encouraging the conversation with professionals like yourself, solicitors and accountants. Understanding the tax implications because obviously, if there's a gap, you're going to be paying more stamp duty. Understand the legal implications, because obviously we have got clients that are wanting to maybe gift some money or combine with family. We've got to think about inheritance tax and some of the decisions you think are right might not be right financially or tax wise or legally. Not just now, but in the future.
I should point out, by the way, if people think this is a dry topic, really important, by the way, if people think this is dry, we actually are doing a tax property podcast in about 3 weeks' time. So make the most of this. This is comparatively juicy. But I really genuinely think it's so important. And I think
it is. Touching
on what you said right early on, people don't talk about their money, and close families still don't talk to each other about that. What do you think holds people back? From what you've seen dealing with the money side, we talked about last week about why people choose not to do it.
Lack of understanding. I've got clients that think they need to release a certain amount to have the right standard of living or to cover future costs. But actually, when you sit down and crunch the numbers, and we've got tools around cash flow modelling and all these different things, and help them to realise that actually you probably are not going to need as much money as you thought. Do you find unless you want to buy the sports car?
And you keep getting an insurance claim because you wrap it around a tree. Do you find that some people overestimate what retirement is going to cost them, for want of a better description, and other people underestimate it, and that those tools help?
I think people think they need more money than they actually do.
Do they? That's interesting.
So we've got clients where we're having to sort of encourage them to spend the money they've got because they think they need to hold on to it. And obviously there's some unknowns around.
Why do you think that? Do you think that's because the biggest thing they've been paying for 30 odd years of their life is this thing called the mortgage, which they, in most of these instances, although we've talked about bridging, most instances the mortgage will have gone. And presumably we're talking now about an age of person where their own children, and indeed I'm thinking of my own family, their grandchildren have already bought property.
Yes.
So there's no longer this, I've got to hold on to all this money because there's already 2 generations there as homeowners.
Yeah, exactly that. So again, that's something we talk through, just let's check your understanding of what you think you might need to be left available Obviously, the big unknown is care costs.
Yes, yeah.
But we try and help them sort of make decisions for now.
I suppose
that they're going to enjoy. Not
we know the cost, we don't know the time.
Yeah,
we
exactly.
don't know how soon and how long.
Yeah. Obviously, the hassle side of it, but that's where we try and add some value. Is we help them through the process, help make their life a bit easier financially. And you can't ignore the costs. That may stop people doing it. Is that there are obviously costs involved.
Yes. Yeah.
But
if you've got this, you outlined it very early on. If you've got the family in the discussion,
yes,
probably not the very first discussion, but the second discussion and subsequent ones, you've got the family as part of that, so that they don't suddenly appear at the 11th hour and cause problems.
Yes.
I imagine, which from a professional point of view would be frustrating, but also for your clients, for somebody to come forward. But if you've got that structure of an organised financial consultant, an agent who understands what needs to be found, you've got what other consultants you need, solicitors and whatever. That professional advice just eases all of these scare factors. Family involved, and suddenly doesn't. There's still a lot involved in it. Every house move, the simplest house move, still has the stresses, even if it's just agreeing a completion date on the point of exchange. That can be bad enough, but complicated ones like this still can be complex. But there are ways of just diluting those pressures all the way through.
It's also worth me bringing up that, as I said, the market has improved. There are lenders that are sort of aiming at the older borrower. So you've got...
What age is the older borrower?
Well, probably my age. They're sort of 55, 60 plus.
Okay.
So they can still borrow. So I had a client where she'd been putting it off. And, by the time she got to me, I said, look, you're only sort of 20, 25,000 short. You can borrow that, and quite cheaply. Even if you're paying 5% like you would now, 5 or 6%. She was lucky and did it a couple of years ago. I said, you're going to be paying like £500 or £600 a year, but you've achieved what you want to achieve. You've put it off, and the shortfall was quite minimal.
Yes.
She didn't want to use savings, so she wanted to sensibly keep some
and
back.
presumably that amount against the property value from a lender's point of view is
exactly that.
Is very
so she was in her 60s, and she was so happy because it kept her close to family, kept her close to friends.
And was she still working and earning, or was her income from
just pensions?
From pensions.
Just pensions.
That's an interesting point.
But a lender will lend based on her age and her asset. So it's only 25,000 against 300 or.
And obviously that's
350.
A comparatively low example. But the principle of you don't need to be working.
Yes.
If you have a savings and an income from those savings, you can borrow at a what.
Don't get me wrong. We're encouraged to avoid borrowing. Yes. It's a last resort, if you like. Obviously bridging's expensive. It's got to be a last resort and short term.
Yes.
Even though the market has improved, you've got retirement interest-only mortgages, lifetime mortgages, even normal mortgages, if you've got the income to support it.
Yes.
It comes last in the conversation, but you've got to present that it is an option. And
it comes back to this opportunity cost of that.
Yeah, exactly.
And I think your example with that lady is quite right. It's £25,000. It's £500 or £600 a year.
That's it.
Well,
a bit more than that now, to be honest. But
a bit more now. But that's not going to be difficult to save that or not spend that.
No.
It gives you the property in the place you want and the time you want it. It makes a lot of sense.
Yeah, exactly that.
Are there any other personal examples, without mentioning names and addresses and reaching massive GDPR issues? Are there any other examples of, I was so pleased to be involved with those people because when I first met them, they weren't sure, and at the end of it, they feel like this is why they do it.
Yeah.
Have you had some of those?
Yeah, a few. I've mentioned a couple, but there was one that I can think of in terms of he didn't realise that he could take money out of his ISAs, and he had a lot of money in ISAs, and put it back. So this was one where it's sort of being put off by the cost of borrowing on a bridge. So met with me, and I said, well, you've got some money there. You didn't want to touch it because of stock market and didn't know the flexibility. So I said, no, you can take it out and put it back. There's your solution. And he just didn't know that was available. So again, that was sort of the education piece. And the other client was the one where they were desperate to have a gap because they'd found the right property in the right location, but it wasn't the right time for them to move into it because it didn't have the right access and the ramps and the right garage for his classic car. So, you know, again, it was just talking it through and helping them understand, you know, what they had available.
It's rewarding, isn't it? I mean, people ask me all the time,
very much
what do you do for a living? And of course you do it for a living. You do it, you know, it's what we do for a living, to make money and feed our families and have the life we have. But the most rewarding elements of it are not, oh, that was a great commission check.
That's it.
Genuinely, the most rewarding elements of it of when you've seen somebody who's got a problem. And I can think of several people who we've helped. One of them was a girl in her mid-20s, but she wanted to buy a house rather than a flat. And she was not really getting much of a service from the agent on that particular flat. We sold that flat for her. 2 years later, she's bought that house, she's got married, and she's just had her first baby. I remember the look on her face when she completed, and that it was just this, I can move on with my life. And of course, you know, often circumstances are more complicated than hers.
Yeah.
But it is just the most rewarding part of it.
Yeah, absolutely.
And you remember those people.
Yeah, absolutely. Well, one of those that I mentioned, I didn't actually earn any money out of it, but if he'd have gone down the bridging route, I would have earned a lot of money out of it. But it wasn't the right thing for him.
It was the right advice. But
give the right advice, and he's referred me to someone else. So
that's exactly the point. And in fact, that young lady I mentioned referred me to her mum, and we then sold her mum's neighbour's house as well. So these things do come around from a pure business point of view. I think that is a really good overview of, and it reminds me a lot of what we talked about last week, that it raises more questions than it answers. But that is the whole purpose and stimulus of this podcast. And I know this subject is quite dry. You know, nobody really likes to talk about money. But if we don't have this finance element of downsizing, then it just ends up being that discussion that Candice and I had, which is about all the more emotional side of things. The two have to go hand in hand. I'm glad we separated them as discussions.
I think that's a good idea.
I hope people have watched both. If you watch this one first, please do go back and look at the one from last week, which talks about the more, I'd say, practical sides of moving. We produced a guide for the downsizing elements last week. I think a guide is completely useless and probably actually something you can't write because you're not allowed to send that advice. But I think what I know you're quite happy to do this. If anybody's interested in finding out more about the financial sides of downsizing, and we're not talking about somebody who's looking to do it tomorrow, that would be fine. But you know, somebody who's thinking this could be the right thing for me to do in 2 years' time, 3 years' time, that time's gone. Before you know it, you're there. You know, we're now 3 years post-COVID, from the initial outbreak. It's already there.
No, I've got a client that's had a first conversation 3 years ago.
Yep.
It was very brief. They didn't think they were ready, but actually he's now starting to lose, you know, use of his mind and forgetting things, and it's making it a lot more difficult. Yeah. So, planning is key.
Absolutely. And I'm right in saying that, I say, no leaflet is of any use on this particular matter. You're happy to have an initial sort of 30-minute or so discussion with somebody, either face-to-face or over the phone, whichever is more easy.
Yeah, whatever suits.
I think you've seen from Mike's approach today, he has a lot of similar ways in working that we do. It's about people, and if you look after people, funnily enough, the business looks after itself. Mike, thank you so much for that. I might get you back to talk about just mortgages and other bits at some stage. That's a little bit of a sweetener for the really dry one of property tax, which I've got to try and work out how to make that one interesting. So I might have to wear a clown outfit. In fact, we might be doing it closer to Halloween, so I might have to wear something suitable for that. But thank you again for that. Thanks as always for watching the Sunday Property Breakfast. We'll be back soon with another. Thank you again, and we'll see you soon. Bye for now.
Hi everyone, Supergirl here, and I am a super fan of SMJ Media Group. They provide support for local businesses, charities and events, and of course create fun content for all of you. If you enjoy our content and would like to help support us, please go to buymeacoffee.com/SMJ Media Group and buy us a coffee.